We will talk about inefficiencies in this class and why they are important. First, let's identify and let's check how an inefficiency looks. Inefficiencies are very important for us. We need to train our eye to identify inefficiencies. And most of the time, inefficiencies will look like this strong movements. Looks like a demand level, or most of the time will be in a demand level or in a supply level. But when the price, for example, in this case, when the price started to drop, price dropped very fast. The movement was very fast. And see that the price didn't connect, didn't close. See these spaces here. Inefficiency. This is an inefficiency. This is an inefficiency. They look like this. Strong movements where you see the price didn't connect with the previous candle. See? We have another one here. These are called inefficiencies. Also are known as imbalances. It's the same thing. So what are inefficiencies? Basically, they are orders that were left behind and in the future will be filled. For instance, there were many sell orders here. There are many sell orders here, and since this is a zero-sum game, we will need buyers at some point. We will need buyers to buy all the orders that were left behind here. And that's why we have this market structure. We have a bullish market structure, which is trying to buy all the orders that were left behind here in this huge and massive drop. If you see again, price filled the orders because it needs to rebalance the market. Price filled the orders in this huge drop. See, we have an inefficiency here, and that's exactly what the market did. Price reversed, filled the orders, filled the inefficiency, and then boom, continue its movement to the downside. It's bearish structure. That's basically what an inefficiency is. And how we're gonna use them? Once again, let's rewind a little bit and let's check the notes we took on previous classes, and keep in mind that we should trade with the trend. So if we are in a bullish trend, like this is an area here, if we are in a bullish trend and we see some inefficiencies, then we know that we have more probabilities that our buy positions are going to work. Why? Because those inefficiencies must be filled. Those orders must be balanced. We still are in an uptrend, and see that we have here inefficiencies. This is our 4-hour chart, but this is applicable in all time frames. It's the same thing. It's the same thing. So price might hit this level. So if we see, or if we have a buy opportunity, we can still target this level because we know that here are positions that need to be filled. All right, this gap, this is basically a gap. This gap must be filled. So we can expect the price to hit this level, to hit this target. That's how we're gonna use inefficiencies. We can use them in the 15-minute time frame for our intraday scalp technique strategy. We can also use them in our 4-hour time frame. We can also use them in our daily time frame if we like to place swing orders. It's applicable in all time frames. As I am a scalper day trader, I use inefficiencies in the 15-minute time frame, 1-hour time frame, or 5-minute time frame. so I can place my order the same day and leave the same day or leave the same session. So if let's say the price changes its structure, because at the end price and the market will do whatever it wants. So let's say price changes structure. It breaks this low. All right, so we are now in a bearish structure and price starts making new lows. We have inefficiencies there. And this inefficiency might get filled. They will not get filled every time, 100%. But for our intraday scalp technique, it will help us a lot that the price will feel attracted to this level, to reach this level. So if we want to swing our trades, we can wait for the price to fill this little gap here, this little imbalance here, this inefficiency. See, price also try to fill this inefficiency there. See, with this wick, with this candle. So that's basically what the market does every day, every time. It tries to fill the imbalances. It tries to fill the inefficiencies. And if we follow inefficiencies, we should go with the trend. And trust me, your results are going to get better, a lot better. Let's see if we have another example right here in this chart. Here it is. It's the same stuff. Okay, we have an inefficiency that right there, here. And price, as you can see, price changed its structure. It broke this level, this low. All right, it created new lows. And what is it doing? It's trying to fill this inefficiency. And see what it did. Since we are in a bearish structure, we have our peaks formed right here. Price dropped from our peak level, our supply level, all the way down to the inefficiency. See, this is a trade for a week, around 2 or 3 days. And if we go back in the chart, we'll find more and more examples. Again, price left some inefficiency here. Then it changed the structure around here, around this level, by a wick, but it changed this structure. It was consolidating, and then boom. It continued with the bullish structure, but filling inefficiencies. And same thing over and over again. Same stuff over and over again. Let's use the daily chart so we can have a better view. Oh, there it is. See? Price change structure in the daily time frame. Why is changing the structure? Because the price is trying to fill this inefficiency there. And that's what it did. So that's how we're going to use them. That's how we're going to use them. That's how we're going to mark our inefficiencies. You just need to connect the levels. We just need to connect the wicks like this that didn't touch each other in a strong movement. And that's an inefficiency in the market, because they're in this specific price and in time, there were only sellers there. There were no buyers. So that's why the market will try to rebalance those orders, because here we only had sellers. Again, we only had sellers. Now we have the buyers, buying those orders. And the other way around, it's going to be the same thing over and over again. That's what the market does. And That's how we're gonna use inefficiency. And efficiency market it's the other thing. Markets that don't have inefficiencies. So if we check this specific price, this part on the price, there are no inefficiencies at all. Why? Because all buyers and sellers and buy and sell orders were successfully completed there. That's what it means. Buyers and sellers, there was a buyer for every seller, there was a seller for every buyer, so all the transactions were completed right there. This is efficiency in the markets, and this is inefficiency. So we will focus on inefficiencies because it will help us when determining our trend.